What up, family? I want to go over building a championship life, how Index Universal Life protects families, professionals, and athletes. Let's get into it. Who am I and why does this matter? Well, it's yours truly, your boy Parry Nickerson here, NFL cornerback and founder of Piknic Group Agency. Now, a lot of y'all know me for playing that lockdown defense on the field. But off the field, I protect families, professionals, and athletes the same way, with smart, permanent life insurance that actually works for them. Now today I'm going to be breaking down Index Universal Life through my pro lens. So tap in. And guess what? This ain't just a regular policy. This is going to be a complete game plan for your financial future, for protection, growth, and legacy. So let's get it. Now let's go over the snapshot overview of the financial service industry. Now they have these companies that are struggling to find talent to distribute financial services amongst diverse demographics. Now you may ask yourself, why is that? Well, because of the aging workforce and the lack of inclusion, the typical agent in the industry is a 62-year-old white male. Now nothing wrong with being a 62-year-old white male, shout out to you guys. But if I had to ask you, who do you think he's marketing his products to? What demographic you think he's marketing his product to? What would you tell me? Well, I'm pretty sure you'll say it's demographics, right? Well, what market is being left behind? As you can see, we got your Gen X's, millennials, your women, your Gen Z's, and your minorities. Now take some time to look at the key reminder before we move on. Why do families, professionals, and athletes need this product? Well, families and professionals often face unexpected challenges in their life, such as job losses, health issues, or life changes that disrupt income stability. While athletes, on the other hand, deal with the big contracts and the short career windows. So one injury or tough season and the financial flows can slow down or come to a halt. That's why protection should be priority number one. And with IULs, it delivers game-changing tax-free debt benefits to safeguard your loved ones if the unexpected happens. Plus, it's designed for today, so you can access cash values for emergencies, education, or retirement without taxes or penalties. Now, you can think of this as having your own championship game plan. Defense to protect what you built, offense to grow it safely, and special teams give you options when life throws a blitz at you. How about that? Now I want to show you guys how the IUL game plan works. Now every month, you're going to make a premium payment similar to like a 401k deduction coming out your check every month. Now a small portion of that premium payment is going to go towards your debt benefit, which I like to call it the defense of the policy. Why? Because it protects your family, your assets, and your legacy, similar to like a defense protect the end zone. Now next, another small portion, it goes towards your living benefits, which I like to call it the special teams of the policy. Why? Because it protects you while you're alive. Similar to when special teams come in those clutch moments at the end of the game, halftime, beginning of the game to set the tone. You get the picture. Now, last but not least, your cash value account. Majority of your premiums going to this cash value account, which is a fancy word to say savings account. It's a fancy word for a savings account. Now, with your money in this account, it will be indexed with the market and not in the market. Now, to give you an example how that works is, let's say people are happy when the 401k is up. Why? Because it's in the market. But when the market goes down and possibly crash, then they're mad. Why? Because they lost money. It wasn't protected. Well, with an IUL, when it drops below zero, because it's with the market, you get nothing, but you don't lose anything either. Now, this next slide, I want to show you why it's important not to lose money. So tune in. Why principal protection matters. Now here, I want to give you guys an example of what happened with a 401k and the IUL in the same scenario based on the market performance. Now both of these accounts, we're going to start with 100,000 in each of these accounts. Now let's say the market drops 10%. So 10% of 100,000 is 10,000. Well, since your 401k is not protected, you lose value. Now you're at 90,000. But with an IUL, since it's protected, you don't lose any money. and you're still at that $100,000 balance. Now let's say the following year the market rebound that same 10%. Now 10% of 90,000 is 9,000. So you don't even break even. Your new balance will be 99,000. But with an IUL, your new balance is $110,000. Now just over those 2 years, you have an 11,000 increase in value achieved by not losing money. Now how about that? Now let's go over how you can access your money tax-free. In this example, we're going to use the 401k and the IUL account like the previous slide. Now let's say we want to borrow $50,000 for a house down payment. Well, in the 401k account, we got $100,000, right? We borrow that 50K for a house down payment. First, it's going to be mandatory we pay it back unless we're 59 and a half years old. If you don't pay it back, you're going to get penalized and taxed on it. Secondly, that remaining $50,000 is in your 401k. That's what you'll be earning interest on. Now we go to IUL. That same 50K we want to borrow, we can borrow that tax-free without the risk of market loss, no repayment required, and guess what? The best part about it, you're going to be earning interest on that same 100K in that account. Now how about that? Now I want to go over the 3 ways money grows. No matter how much you have or how little you have, they grow in these 3 ways. First, we're going to start off with your fixed accounts. These are accounts such as your checkings accounts, your savings accounts, your money market accounts, your CDs accounts. We know with our money in these accounts that they're super safe and insured by the FDIC up to $250,000. But we also know with our money in these accounts, they had little to no growth over time. And as you can see how they look on the growth chart. Now you move on to the variable accounts. These are accounts such as your stock market portfolio, your real estate portfolio, your crypto portfolio, your qualified plans like your 401ks, 403bs, IRAs, Roth IRAs, things of that nature. We know with our money in these accounts that they can grow exponentially over time. But we also know that you can lose a large portion of all of your money in these accounts. And as you can see on the growth chart how that looks. As you can see, it's growing. One slip and fall and the market could crash. And last but not least is the indexed account, which is where the IUL shine. Why? Because your money is tied to the market, similar to like the S&P 500. But the best part about it, it have a 0% floor. So you're guaranteed not to lose money if the market drops. Which you also have a reasonable cap on that growth, which is around 9%. And as you can see how that will look over time on a growth chart. Stairway to wealth. Now let's move on. Now let's go over the 5 homes of money to see where your money been living at. Now what I like to do with these accounts is compare the strengths and weaknesses, which we're going to do on the following slide. So stay tuned. Now with these accounts, we know that the bank accounts is safe and liquid, but almost no growth. Your stock market account got your big growth potential, but it's high risk. Your retirement accounts, your 401ks, IRAs, we know they got the tax advantage, but you also got the penalties if you touch it too early. When it comes to the real estate, you got good growth, but it can be illiquid and management heavy. Now last but not least is your permanent life insurance. This wins on safety, tax-free growth, and the living benefits that come with it. And this checks the box for long-term security and growth. So that's why I love this product for my clients. As you can see, we got the 5 homes of money right here. And what we did is compare them against these 5 different characteristics on the left-hand side. First, we got your liquidity. It means how fast can I take my money in and out of these accounts within 24 to 48 hours. It's real liquidity. Second, we got your safety of principal, which means my money in these accounts, can you guarantee it does not lose principal value? Thirdly is your tax deductibles, which means my money in these accounts, will it be deducted at the end of the year off my taxes? Fourthly is your tax advantage, which means with my money in these accounts, do I get taxed now, later, or never? And then lastly is growth, which means my money in these accounts, do I experience real growth? We all know what real growth looks like. Now let's move on to your bank accounts. With my money being in the bank accounts, I can experience liquidity because I can go to the ATM or the bank branch and take out my money that way. And I also know that my principal is safe because it's insured by the FDIC up to $250,000. Now, when it comes to tax deductibles, tax advantage, and growth, my money being in a bank account, it does not experience none of those benefits. Now, moving on to the stock market. My money in the stock market, I can experience liquidity because I can buy and sell the shares, transfer that money back to my bank, and take out my money that way. But I also know my money being in the stock market, it carries its risk. So the principal value is not safe. And I don't experience no tax deductibles or no tax advantage with my money being in the stock market. But I can experience exponential growth over time. Next is your qualified plans, which is things like your 401ks, 403bs, IRAs, Roth IRAs, things of that nature. When it comes to liquidity, if we touch those accounts too early, we could get penalized as taxed on them, especially if we don't pay it back. Moving on to your safety of principal, we know with our money in these accounts that they are invested in variable accounts that we talked about earlier. So the principal value is not safe in these accounts. But we can experience tax deductible, tax advantages, and exponential growth over time with our money being in these accounts. Now moving on to real estate, when it comes to liquidity, we do not have liquidity dealing with real estate. And we know our principal value is not safe. And we also do not experience no tax deductible, but we can experience tax advantages with depreciation. And we can experience the growth over time investing in the real estate market. Now last but not least, one of my favorite is the life insurance. When it comes to liquidity, you have access to your money, tax-free loans. Safety of principal, you have guaranteed not to lose money because you got 0% floor, like I told you before. Tax deductibles, you don't experience that in these accounts because it is funded with after-tax dollars. But you experience the tax advantages because of the tax-free growth over time. And last but not least, the exponential growth that you can experience in these accounts based on the right indexes in. And as you can see, the score comes out of 4 out of 5. How about that? Building your championship team, IUL benefits. Now, ladies and gentlemen, this goes beyond just that benefits. You get the tax-free growth and tax-free access to your cash value. Access to your accelerated riders for critical, chronic, or terminal illnesses. Lifetime income riders for a steady retirement income. And you have the flexibility to adjust your premiums as life changes. As you can see at the bottom, this is a permanent coverage for life. So, it works with you while you're winning on your field or in your profession. And building off your legacy when you're off it. Now, if y'all ready to build y'all championship life, y'all know who to hit up. If this fits your family or professional goals, please reach out to me because I like to review y'all situation personally myself. And there's no pressure. So just go to my website, reach out to me on my social media, and book a consultation, man. Let's build this championship together. Thank y'all for watching. Any questions, comments, or anything like that, like I said, reach out to me. And see you soon.